Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the euro currency. So this week it seems that the fundamental and sentiment events that we have on euro currency are more important and interesting compared to what we see on the technical charts. From the fundamental point of view, it's two major events, group events that have happened previous weeks. So first is this multiple statistics. This was the poor statistics in Germany. In the United States, it was mixed data. And that mostly confirms our view on the euro currency, that the overall situation in the European Union and in the economy as well, and then the European Central Bank policy, their tools that they have, and that could use the measures that they could apply to improve the situation, looks weaker and not as different as in the United States and the Federal Reserve. So, and that press on euro currency and recent data in Germany was not positive. So, in our fundamental part of the research that we put in the forum, as usual, in the weekend, we talked about this and analyzed this data. Second moment is a Brexit, of course, and I'm personally not an expert in United Kingdom politics. And that's why in this week we offer you to follow the analysis of the FETM Consulting, who they have released the new report concerning the Brexit and the ways how it could happen. And they gravitate to the idea that hard Brexit is very probable. Another important solution, an important conclusion that they made is that Great British Pound right now hasn't priced in this possible event. So this is important report for us, for traders, and if you're interested with that, you could read also in our weekly report. So I think it should be interesting to you. So speaking on the technical picture, in two words speaking, the price action, the performance on the euro looks really poor. And the chances that euro currency had last week for taking the situation in a positive mood, it has failed to do this. So, for example, take a look what we have on the daily chart. And in general, if you remember, with the 2 weeks, we talked about the bearish context on the euro. We said, well, in general, the price action that we see doesn't correspond to the idea of the bullish market. Well, maybe if market will be able to hold about 112 area, it could fluctuate a bit more in the area of the 2 points. It's 112, 114, but downside breakout probably will accelerate the possible challenge of the major lows on the weekly, on the monthly chart that stands here. It's 1170. First of all, guys, we should forget about the bread and butter trade. So this is important. So because take a look, market has closed about the 3x3 here, but now it turns back again. Second important moment here, guys, take a look at the price action around previous lows. So market has made 5 challenges to break it up, and all attempts has failed. So market was not able to close and return back above this area, above 1235 level. Could we speak about double repo? Well, by letter, theoretically, yes. But in reality, probably no. Why? Because double repo suggests 2 major things. First of all, it suggests clear technical signs of the reversal. Second, it suggests the changing of the mood of the market, the sentiment. But on the sentiment analysis tells that traders increased the net bearish position on the euro currency. Overall price action doesn't look as a reversal. So I would suggest that we will not get any double repo. The only exception is just if some external factor will start to work, some political impact, some unexpected news somewhere, so something external. but not based on the factors on some economical and financial factors that drive the market. So here, by these factors, we do not see any improvement in any bullish sentiment. So if everything stands as it is, we expect that on the next week, market probably will come closer to the lows, or maybe we should be ready for the challenging of these lows. Because overall price consolidation in a tight range right near the major lows could look like building an energy for a breakout. This is first moment. Second moment, if you'll take a look at the hourly chart and the overall price session for the week with our hand shoulders pattern, you could take a look what really has happened. So here was our entry on the long side of the market. So if you remember, we talked about this. If you would like to take the long position based on hand shoulders, that's the point that you could take position. And it has done pretty nice. So market has returned back up to the neckline. It was a pretty room and time to move stops to the break even and even get some profit here. But take a look what has happened next. On the non-farm payrolls list, market dropped. So this price action, absolutely not in a way with the hand shoulders. Hand shoulders reversal pattern. Here at least we saw some acceleration. So at least it looks like in the same manner as the drop. So some acceleration here and here. It's very nice. Gradual retracement, but the right arm is very weak and slow. Testing the neckline, failed to break it up and drop. This is preliminary steps for a breakout, guys, to the downside to the collapse and challenging the 1170s. From the technical point of view, we should keep an eye on 112 area. As soon as market will break it down, it will tell us the hand shoulders has failed and be prepared for challenging on the bottom of the head. Since bottom of the head stands at 1183, just 15 pips above the daily lows, it simultaneously means the challenging of the daily lows as well. So, and that could be really big and fast acceleration in the market because this is a very important level. A lot of stops stand there, and it really could trigger the collapse on the euro currency next week. That is what we'll be watching for in the euro currency. Currently, guys, we do not see any bullish context in the market. Something positive that could tell us that, well, maybe we could take the long position currently. So I think that's definitely not. That is our view on the euro. So as a bottom line, we are watching for price action here, 112 area and probable challenging of the lows on the day on the euro. Second, be prepared for the 12th of April. As you know, that is the day of possible hard Brexit. And Fathom Consulting suggests that's a really big chance that it could happen. Now you could imagine what will happen with the Great British Pound. So you have the week ahead just to think whether you would like to take part in this or not, because it definitely will be political trade. This is not some technical and financial statistics trade. That is purely political bet. And not everybody likes to make the bet on politics event. But that is also a major event, and we will keep an eye on them as well.